Hi there, and thanks for joining us here at PhillipCapital Market Watch. I'm Khoo Gek Han, dealer from PhillipCapital's Contracts for Difference, CFD. Today, we will discuss about how we can invest in macro themes in the new normal. During the first quarter of 2020, we saw the S&P 500 index plunge more than 30% from its peak in February due to the anxiety over the COVID-19 outbreak. Since then, the market has staged a strong comeback with both S&P 500 and Nasdaq indices reaching new all-time highs. The S&P 500 has rebounded 53% from its March lows, while the Nasdaq has done spectacularly well with more than 71% returns since the March lows. COVID-19 has since escalated into a global pandemic, which forced many countries into lockdown, causing widespread economic damage. It also sped up and entrenched some of the trends that were in place before the pandemic. Here are some sectors that benefited during this outbreak and that you can look out for going forward. With the pandemic, many retailers have been forced to shift operations online. Many consumers have also turned to online shopping for their groceries and other daily necessities. This trend is expected to last as the pandemic forces countries into extended lockdowns. Even as more consumers go online during this period, many workers are also forced to adopt remote working. This new model of work requires services such as video conferencing and cloud storage solutions. Together, these have caused data usage to balloon, and these practices are expected to last as more companies realize that working from home is a viable alternative to working from office. To gain thematic exposure to the e-commerce boom, investors can look to the ProShares Online Retail ETF, which provides a concentrated exposure of around 20 to 24 stocks of primarily US and China domiciled stocks that mainly sell online or through other non-store channels. The ETF has risen more than 120% from its lows in March, soundly outperforming the broader indices. Even before the pandemic, many developed countries around the world were facing the prospect of rapidly aging populations and the escalation of healthcare costs. The pandemic highlighted the lack of funding in the healthcare infrastructure in some countries and refocused the need to invest in the healthcare sector. To gain broad-based exposure to the healthcare sector, investors can look at the SPDR Healthcare Select Sector ETF, which contains pharmaceutical companies, healthcare providers, biotechnology, and healthcare technology companies, among others. The ETF gained roughly 45% from its lows in March. Although it seems to have lagged the performance of the S&P 500 and Nasdaq indices, it also declined less during the peak of the crisis in March due to the defensive nature of the healthcare industry. Finally, despite denials in some quarters, it is generally agreed that the world is warming and climate change is a reality. One silver lining to the pandemic has been an increase in public consciousness on environmental issues. With the lockdown drastically cutting travel, many cities around the world reported improved air quality and lower levels of gases that contribute to the climate warming problem. It is hoped that this wokeness among global citizens will carry on after the pandemic ends. Investors who want to align their investments with their environmental principles can look to the SPDR S&P Kensho Clean Power ETF to gain exposure to the clean energy sector. The ETF has gained more than 108% since the March lows. Overall, COVID-19 has not only forced us to rethink the way we work and live, but has also sped up some of the trends that were already in motion before it happened. Moving forward, these trends are expected to last, allowing investors time to get in and ride the wave. That's all for PhillipCapital's Market Watch. Do remember to like and follow us on social media and subscribe to us on YouTube. Also, tell us what you think. What other trends do you foresee post-COVID-19? Leave your comments Thanks for joining us and see you soon.